Hello traders and welcome to another video review. Today is a Tuesday, last day of the July 2024. The monthly close is upon us, so let's take a look at the economic calendar for today. As you can see, we got some data overnight. Job applications ratio from Japan was an expected number of 1.24 with the actual number of 1.23, and the building approvals from the Australia went down from 5.7% to minus 6.5%, which is way worse than minus 2.1%. We are waiting for the GDP data across the Eurozone. We got the first one. French GDP beats the expectations of 0.2% and stays at the same level of 0.3%. We are waiting for the GDP from the Hungary, from the Germany, from Spain, and of course from the whole Eurozone. German GDP is scheduled for release at 10 o'clock. The market participants expect German GDP to shrink from 0.2% to 0.1%, and the whole GDP from the Eurozone is expected to shrink from 0.3% to 0.2%. Those data will be released at 11 o'clock, and at 2 o'clock we got the CPI data from Germany. The market participants expect a hike from the on the monthly basis from 0.1% to 0.3%, and on the yearly basis they expect the CPI to stay at the same level of 2.2%. During the US session, we got the HPI composite data scheduled for release at 3 o'clock. The market participants expect a drop from 7.2% to 6.5%. CB consumer confidence and JOLTs Jobs Openings are expected to be released at 4 o'clock. And then we got the API Weekly Crude Oil Stock data scheduled for release at 10:30. So what do we have here for today? Pretty busy session, both during the London and US sessions. So it looks like we are going to have a lot of volatility for today. Let's now switch to the technical part of our review, and we start with euro dollar. The 4-hour chart of the euro dollar has been seen testing the level of 1.0803, which is the technical support, and it's currently after the bounce testing the level of 1.0826, which is now the resistance for the price. We need to see some sort of the breakout above this level in order to test the 50 and 100 periods moving average at the 4-hour chart. Those moving averages are located at 1.0847. The next target for bears is located at the level of 1.0789, and this is the last technical support located before the very big gap to the downside. Please notice that the 50% Fibonacci retracement was located at 1.0808, and this 50% Fibonacci retracement has been tested. The retracement comes from this swing high. So what do we have here? Very nice 50% retracement on the euro dollar. Now it's all about the bullish let's say strength. This kind of a pin bar here is telling us that the bulls are doing quite all right, mostly after the test of the 50% of the Fibonacci retracement. They managed to test the technical resistance, and now it would be good for them to see any kind of a movement to the upside. If we apply the trend line to this recent developments, you can see that this was a fake breakout. This was quite alright, but it was a fake breakout too many times. So according to the newest data, our trend line supposed to be somewhere, let's say here, if you place it by the extremes. So that's the situation with that trend line, and that's another resistance for the bulls. So they have 50, 100 periods moving average, trend line, and then of course the technical resistance itself, 1.0872. Any breakout higher above this zone would likely push the momentum to the positive area, so that would be above the level of 50, and then extend the move towards 1.0918. So that was the euro dollar because of the data from the Japan. Let's take a look at the US dollar to the Japanese yen, and we can see clearly that finally momentum breaks above the level of 50 and the market breaks above yesterday's high at 154.75 after a period of the consolidation. So this level here might be treated as the technical support. We will adjust these levels. Now it's 153.04. That level here now switched to the technical support because we broke above it, and now the next target for the bulls is located at the level of 155.43. We are trading above the 50 periods moving average. 100 periods moving average is located at 156.53, just below this nice supply zone. As you can see, 157.19, 157.78. So it looks like the market wants to move higher. We are bouncing from the extremely oversold market conditions, as you can see, breaking towards the positive territory. Outlook looks bullish. The other situation here will be discussed on the crude oil chart. So the situation here is, as you can see, very nice swing to the upside and very nice, as you can see, movement to the downside. On the other hand, we can see clearly that this level wasn't any specific level for any of the market participants. However, this one might be quite interesting for a support if we manage to. There you go. And it was tested overnight, 75.35. So that's the technical support, and that's the last one before the swing low at 72.48 will be tested. As you can see on this chart, we are trading below 50 and 100 periods moving average. I guess that we need to add one more technical resistance level, which is located roughly around here, but wondering whether this one would be better here. Yes, this one would be better because it was tested here before. So that's the another technical resistance. And of course there's one more in the short-term time frame of the 4 hours. You can see this technical resistance, the swing high at 58.59. So right now we moved away from the moving averages and we fall out from the channel. If we apply the parallel channel here to the from the top, you can see that the market has been moving roughly inside of this channel. Yes, it was quite a good channel here, and then it fell out from this channel. And now if we apply another channel, you can see the market is sharply moving lower, sharply moving lower. Very sharp descent here on this channel. Let me just move it a little bit away as well. So right now the lower, let me just move it here, lower channel line is roughly around the level of there you go. So that was the blue one. Let me just change it to yellow so everyone is on the same level. There you go. So that was the main channel, and now we are in the acceleration channel to the downside. It looks like there is a space here to go as low as 72.45. Please keep an eye on this level because this is the main technical support for the crude oil in the short term. Any breakout lower would be considered very bearish. And last but not least, let's take a look, of course, at Bitcoin. What is Bitcoin doing? We hit the level of $70,000, actually 70,043, and then this level was swiftly rejected. So right now we are testing this short-term trend line on the chart. Massive sell-off order has been triggered after $70,000 has been hit. Bearish engulfing pattern on a 4-hour chart, very big down candle extension to the downside with the local low at 65,849, almost a little bit over $4,000 down. But if you could take a look here, you can see it clearly that we hit again the extremely oversold conditions on the 4-hour chart. Now we broke below the level of 50 on the RSI. The momentum is weak, 43 points. We need the momentum to break back into the positive territory to see the Bitcoin moving higher, to see the Bitcoin moving way above this recent $70,000 mark. The next target, important target, is of course $71,000. So it still looks bullish for me. However, in the short term, that's no surprise. We got this kind of a movement to the downside. Our 1, 2, 3, 4, and 5 waves to the upside impulsive cycle has been completed. So right now ABC to the downside is possible, roughly around the level of $63,300. This is the previous territory of the wave 4 of the lesser degree, and the previous territory of the wave 4 of the bigger degree. So it's possible that the ABC simple corrective pattern will hit this level before the end of the corrective cycle is completed, and then of course resumption of the uptrend is possible. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.